Hello everyone, welcome to my YouTube channel Indian Bull vs Bear. In today's video, I'll share my analysis of historical trends of the leather sector. This video is part of the series The Final Missing Piece. Before moving on, please read the entire disclaimer carefully. The leather sector of Indian share market consists of companies which are primarily engaged in tanning and finishing of raw hides and skins, manufacturing leather products like footwear, leather garments, bags, belts, wallets, upholstery, export and synthetic leather and allied chemicals. The major growth drivers of this sector includes high export potential, growing domestic demand, shift from China, make in India, and skill development, e-commerce boom, and sustainable and vegan leather products. The government supports the sector with policies like Indian Footwear and Leather Development Program, 100% FDI permitted via automatic route, export promotion, and environmental norm support. And the key challenges to the sector includes environmental regulations, fragmented industry, raw material availability, competition from synthetic alternatives, and global demand volatility. So, now in order to identify trends in this sector, I will present two graphs. They are the end result of my analysis of the share price movements of last 10 years of top 10 companies of this sector. The top 10 companies of this sector comprises of one large cap, three mid cap, and six small cap companies. The first graph will show the yearly returns, whereas the second graph will show the monthly returns. Let's start with the first graph, which is the yearly returns graph. So the green bars in this graph shows the positive yearly returns. The red bar shows the negative yearly returns. The orange line down here at the bottom shows the cumulative returns. The green line shows the number of months with positive returns and the red line shows number of months with negative returns. So let's start with 2015. 2015 was a very good year for the sector as the sector managed to give returns of 50.84% with 8 positive months and only 4 negative months. But then 2016 was a very bad year and the sector managed to give negative returns of 24.66% with 7 negative months and only 5 positive months. The sector rebounded in 2017 and gave massive returns of 65.94% with 10 positive months and only 2 negative months. And the sector nosedived in 2018 with minus 21.30% returns with 8 negative months and only 4 positive months. 2019 too proved to be a bad year for the sector, and the sector managed to give returns of minus 17.16% in that year with 8 negative months and only 4 positive months. In 2020, there the sector only managed to give returns of 9.6%, which is almost nothing, with 6 positive and 6 negative years months. Sorry, in 2021, the sector skyrocketed with 92.94% returns, 8 positive months and 4 negative months. 2022 again was a average year with 22.38% returns with 6 positive and 6 negative months. 2023 was a decent year with 30.03% returns, 9 positive months and 3 negative months. And 2024 was an average year at best with 22.07% returns, 6 positive months and 6 negative months. To check the cumulative returns, let's follow this brown line over orange line over here, and the 10-year cumulative returns are 405.09%, which is just above 5x. Let's see the key takeaways. So the cumulative returns 405%, which is 5x, CAGR of 17.58%. So not a good CAGR, I would say. 17.58% is not a good CAGR. Net negative yearly returns three times in last 10 years. Again, not a good number. The three negative years were 2016, 2018, and 2019. The best year was 2021, clearly, with 92.94% returns. But the worst year was 2016 with minus 24.66% returns. The positive to negative year ratio is 2.33 is to 1. Not good, but not worst either. So the yearly graph is not impressive. Let's see how the monthly graph looks like. So this is the monthly returns graph. The green bar over here shows the positive mean monthly returns. The red bar shows the negative mean monthly returns. The green lines over here shows number of years with positive returns, and the red line shows number of years with negative returns. So January is a below average month, I would say, with 1.54% average returns in the last 10 years, with 5 positive years and 5 negative years. But February and March are massive bad months for the sector, with negative returns of minus 4.78% and minus 3.23% respectively, 8 negative years and 7 negative years. Extremely bad months for the sector. April, like several other sectors, is the best month for this sector as well, with 9.23% average returns. 9 times out of last 10 years, the sector has given positive returns in month of April. May, a flat month with 0.14% average returns over the last 10 years, 6 negative years and 4 positive years. June and July seems to be two good months for the sector, with 5.43% average returns in the month of June, with 6 positive years and 4 negative years, and 5.96% returns for the month of July, with 8 positive years and only 2 negative years. August, another flat month with 0.44% average returns, 6 negative years and 4 positive years. Rest 4 months as well seems to be an average months with 1.84, 1.09, 1.15, and 2.36% returns, with 6, 6, 6, and 7 positive years. So not at all impressive. I would say even worse than the yearly returns graph. So it's quite clear that there are two negative months, two flat months, and then 5 average months, and only 3 months are good months for this sector. Anyway, let's see the takeaways if there is anything which I am missing from this graph. Cheaper months, February and March. So February and March are clearly the cheaper months, and the massive cheaper months, massive negative average returns of minus 4.78 and minus 3.23%. But apart from that, May and August, these 2 months are also not good for this sector. They are the flat months with 0.14% returns and 0.44% returns. So nothing much to talk about in those months as well. And I would even say that the other months, September, October, November, December, and January too, are not two great months to be exempted from the cheaper months category, anyways. The costlier months are April, June, and July. April, June, and July with 9.23% average returns, 5.43% average return, and 5.96% average returns. So these are the costlier months, but I would say these are the only 3 months in the entire 12-month window in which this sector actually performs reasonably well. Rest, all the other months are not good months for this sector. So it's an extremely cyclical nature. Let's see the final ratio as well, which is the positive to negative month ratio of 1.22 is to 1. Now, this 2 is not a very good number for this sector. We have seen most of the sectors have better ratio than this. This ratio means that for every one negative month in the last 10 years, that is in the last 120 months, there were 1.22 positive months for this sector. So not again, not a good one, not worst, not best, but still not a good number for this sector. So all in all, quite an underperforming sector and underwhelming sector, I would say, in terms of all the other sectors that we have seen so far in the Indian share market. I will leave it with that. That is all from my side on this in this video. Thanks for watching it. Let me know in the comment section if you like the content. Click the like button, subscribe to the channel, and share it with your family and friends. I'll be back soon with another video. Goodbye for now.